North American markets rallied and oil surged on geopolitical concerns. And so for more on today's market action and investment ideas, we're joined now by John Bay, Chief Investment Officer at NEI Investments. It's good to have you join us. Thanks so much.
Thank you for inviting me, Lindsay.
A lot to go over here. I think we'll start with the price of oil, which we saw, surging today. What do you make of that? Do you foresee more volatility in the future, I guess?
Yeah, as you mentioned, oil prices rose about 3% today based on two geopolitical events. First one is the peace negotiations between Russia and Ukraine ended in Geneva without a breakthrough in those talks. But the second, more important, I think, geopolitical event that happened today was the increased concerns around the U.S. and Iran that threatened supply disruptions through the Gulf of Hormuz. And, this is really important because that narrow strait, approximately 1/5 of the oil supply goes through that channel from the Persian Gulf. And again, any geopolitical concerns there will take oil higher, which is, geopolitical concerns actually is one of the few things can get oil prices higher, because currently the fundamentals on crude oil are very, very bearish.
Yeah, it's going to be interesting to see that as well as we talk about, oversupply in the oil market too. But we do need to move on because there's, as I said, lots to talk about. Let's talk about some particular Canadian stocks. We'll start with Shopify. Big mover today. It finished at the top on the TSX up more than 8%. What do you make of? I'm seeing 8, but what do you make of what it's been doing?
Thanks, Lindsay. Yeah, big move today, up about 8%, as you said, on an upgrade from an analyst shop, upgrading the Truist Securities, upgrading it from a buy to a buy from a hold, raised its target price on that as well, arguing that the broad sell-off in software that Shopify has been caught up has been overdone, and it's providing an attractive entry point for investors. As you mentioned, software companies are being hammered by AI concerns. As investors are now going through and wondering which companies and industries are going to be disrupted by the new AI disruption patterns. But Shopify is a really interesting case. As we see AI capex continue to mount, and we're seeing some estimates on the AI hyperscalers spending about $660 billion on AI capex. What that means is that a lot of these big mega cap companies that used to be very defensive, huge cash piles, and big positive cash flow numbers, but that's changing with the big spend that's happening on AI capex. About 90% or more of their free cash flow is now being plowed into capital expenditures, to hurting share buybacks, for instance. Creating share buybacks is a thing of the past. And that's, for me, what's really interesting about the Shopify story is that, with their earnings last week, they did have a revenue beat, small earnings missed. But they also announced a $2 billion share buyback and some really interesting announcements on the agentic AI front that allows them to really be integrated into the new chatbot infrastructure. That if you want to go and ask your favorite chatbot, what should I buy my wife for Valentine's Day? That isn't flowers. It can go and give you some 3 suggestions. And if you're a Shopify retailer that's enabled this, you can buy directly from that chatbot using their e-commerce platform.
It's a very interesting story. Another interesting story is a Canadian mining company, Northern Dynasty. It's down more than 38% to end the day. And this is after, maybe in part, the U.S. opposing its critical mineral project. I'm wondering what you make of that story. Is this kind of like a company story, or is this more of a wider picture of these companies maybe trying to do business with the U.S.?
Yeah, you know what? It's really interesting. We started at the top with geopolitical. We're probably going to end on this story with geopolitical. Certainly, it's a company-specific story where this mine was again the Department of Justice maintained the environmental veto on the approval of this mine based on environmental concerns, which is really kind of interesting coming from this U.S. administration. But really, as you mentioned, there is a geopolitical angle to this, which is Canada and the U.S. In terms of their trade relations, has taken a very different tone over the last 12 months. And the new Canadian government, has really taken the opportunity to focus on areas that we can control, and not on things that we can't control. And so I think this is again just another data point to see why that is important, where we can do things like reducing interprovincial trade barriers, pursuing nation-building projects, diversifying trade beyond the U.S. are all things that we can do to start to help the economic profile and growth prospects of this Canada, and not be concerned about what other countries can control.
Do you think it maybe would scare off other companies, though, from trying to do something similar in terms of maybe developing in the U.S. or making deals with the U.S.?
It's a great question. And, I think that, the way I would approach that answer is that, again, let's talk about the CUSMA, the U.S., the Canadian trade negotiations that are happening. The reality is that, we as Canada need to, put our best foot forward, try to ensure that our relationships with the United States is as stable as we possibly can, and negotiate the best trade agreement that we can, and then on top of that, and we'll see where those negotiations take us. But at the same time, let's prepare for the worst, and hope for the best, prepare for the worst, and if you as a company can pursue growth opportunities in different environments, not just with the U.S., but diversify your customer chain into Europe and Asia and things of that sort. I think that as they say, concentrating all your eggs in one basket, whether it be the American basket, Asia basket, or European basket, isn't always the best strategy, but a diversified strategy of your customer base makes, really helps the risk profile of your company.
For sure. Okay, we will leave it there. John Bay, Chief Investment Officer at NEI Investments. It's so good to have you join us. Thanks so much.
Oh, thank you so much. Really enjoyed this.